We are witnessing a silent yet more ferocious gold rush than any in modern history, and its epicenter is coming from the east. In just 1 year, China has repeatedly announced the discovery of 2 colossal gold deposits. Each mine is said to hold reserves exceeding 1,000 tons of pure gold. One in Hunan, central China, and one in Liaoning, the northeast. To put it in perspective, those 2,000 tons of gold are equivalent to nearly 90% of the national gold reserves China officially reports. The figure is so enormous, it sounds almost unreal. Roughly 8% of the combined gold reserves of all central banks worldwide. In value terms, the Hunan deposit alone is estimated at around 83 billion USD. This is no longer merely a geological discovery, it is a strategic national asset. The Liaoning deposit is also valued at tens of billions of dollars. But what makes the world raise an eyebrow is not only the number, it's the timing. These discoveries of the century were loudly publicized right as China's economy is sinking under pressure. The real estate bubble has collapsed. A wave of giant conglomerates has slid toward insolvency. Exports, the primary money-making engine, are weakening. The renminbi is depreciating. And most importantly, market confidence is plunging. The question many international experts are asking: is this a coincidence or a finely staged script? Welcome to Inner Shadow, where you'll find truths society doesn't want you to know. A gold rush or a confidence show? When a nation falls into a crisis of confidence, it needs an anchor asset, and nothing compares to gold. Some argue that the high-profile announcements of massive gold mines are a political move, a message to domestic markets and the world that says, "Don't worry, we still have real collateral." But the problem is that to this day, there has been no independent evidence confirming the actual reserves of these 2 mines. In geology, the distance between discovery and extraction is a journey that can take decades, extremely expensive, high risk, and uncertain. Beijing does not seem overly concerned with international verification. It appears that what they need right now is not real gold pulled out of the ground, but confidence built from a story about gold, like someone on the verge of bankruptcy, rushing to show creditors their inheritance that's coming, even though no one has seen the will. Yet even if the 2,000-ton story is true, it still may not be enough to satisfy Beijing's thirst. Because alongside the glossy declarations, China is stretching its arm across the globe, especially into Africa, in a campaign to stockpile gold at any cost. A two-jaw resource squeeze. If the domestic gold mine narrative is a psychological play, then what's happening in Africa is the real action. China and its ally Russia are executing 2 different strategies with the same objective: to drain the world's gold resources into their own reserves. 80. China. Ghost extraction. In Ghana, one of Africa's most gold-rich countries, people are bearing the weight of an environmental disaster. Groups of Chinese miners have poured in under the guise of tourism or business, then organized illegal gold extraction on an industrial scale. They bring heavy excavators, screening equipment, and even extremely toxic banned chemicals such as mercury and cyanide. There are even armed security forces guarding illegal mining sites. This model is being replicated in Congo, Zimbabwe, Cameroon, and Sudan. Wherever there is gold, there are footprints of Chinese networks. They move people in, inject money, bring machines, and establish shadow protection networks to transport hundreds of kilograms of raw gold out of Africa, regardless of law or ethics. When challenged, Beijing always denies responsibility, claiming these are spontaneous acts by private citizens unrelated to the state. But that is a brazen sophistry. No spontaneous individual can operate fleets of excavators, move banned chemicals across borders, and hire armed guards to confront local authorities without a more powerful hand backing them from behind. 2. Russia. Geopolitics. In exchange for gold. If China operates like an underground extraction conglomerate, Russia plays at a higher level. Geopolitics in exchange for gold. Russia doesn't need to mine illegally. It partners directly with friendly military regimes in Mali, Burkina Faso, Sudan, and the Central African Republic, places where gold remains abundant, but technology is lacking and politics are unstable. Russia provides what they need: security, military support, and political recognition. In return, Moscow receives concessions to exploit fat gold mines. This is geopolitical business. Russia trades influence and military power for gold, forming a resources security alliance that the West finds difficult to penetrate. At the same time, Russia is also concentrating efforts on its own mega deposit. The Polyus Group controls the Sukhoi log mine, Irkutsk, the largest undeveloped gold deposit in Russia, with estimated reserves exceeding 2,000 tons. This project is often seen as a vital core of Russia's long-term economic strategy. Clearly, both powers are accelerating their accumulation, but the biggest question remains: are they hoarding gold merely to get richer, or are they preparing for a larger plan that could reshape the entire global financial order? The Bretton Woods legacy, a garment woven from promises. To understand today's move, we have to return to history. Gold, by itself, is just metal, but in finance, it embodies trust, the ultimate backstop for every asset, the guarantee garment for a currency. The way the US dollar came to dominate the world is the clearest proof. In 1944 at Bretton Woods, when Europe and Asia were still ashes from World War II, the United States, the only major nation not devastated, built a new financial order. Washington imposed a framework that forced 44 countries to comply. The USD became the center of the system, fixed to gold at $35 per ounce. Other currencies were not pegged to gold, but pegged their exchange rates to the USD. America's message was simple: the world didn't need to stockpile gold, stockpile dollars, because every dollar is backed by real gold. That promise was persuasive, not necessarily because the world trusted America absolutely, but because there was no real alternative. But in 1971, President Richard Nixon tore up that promise, declaring the USD could no longer be exchanged for gold. The guarantee garment was stripped off. From then on, the dollar was no longer backed by material value, but by trust and U.S. economic military power. And more importantly, by a tacit agreement with Saudi Arabia that all oil transactions must be conducted in USD. Thus, the petrodollar system was born, turning the USD from a currency that was backed into a currency the world was forced to use. More than half a century later, China seems to be weaving back the very garment America discarded. Beijing does not hide its ambition for a Bretton Woods II, where the renminbi becomes the new standard. And that is why it tirelessly hoards gold and promotes stories of 2,000 tons of reserves. A coded message to the world: this is a backed currency, this is real value. Feel secure using the renminbi. If China's motive is dominance, then Russia's motive is survival, weaponizing trust when reserves can be frozen. For Moscow, gold is not a tool for domination, it is a tool for survival. In 2022, the West launched the largest financial sanctions strike in history, freezing more than 300 billion USD of Russia's foreign reserves. The bitter lesson became clear. Any asset you hold inside the Western banking system, USD, euros, or bonds, can be erased with a single administrative signature. They are not truly your assets. They are a promise from the West, and that promise can be withdrawn at any moment. This sanctions blow may be a tactical victory, but it is a strategic disaster. It sends a deadly signal to every country from China and India to Saudi Arabia that their assets are not safe. And from that point, gold becomes the only option, with absolute collateral. Unlike the dollar, which has been weaponized, gold is a tangible asset. It cannot be frozen or erased if you control the vault. Gold becomes the backing layer for the ruble's survival strength, helping Moscow reassure partners that its currency is still supported by an enduring value. Gold also allows Russia to sustain trade after being pushed out of SWIFT, the lifeblood of global commerce. The play is simple. Russia sells oil, gas, and coal to friendly countries such as China, India, and the UAE in exchange for gold, then uses that gold as a decentralized currency to buy goods. This enables Moscow to keep purchasing chips and components from China, industrial equipment from India, or luxury goods from the Middle East without touching USD or euros. Gold becomes an intermediary bridge that shields Russia from financial attacks. But the game does not stop on the financial front. Both Russia and China are aiming at a larger target, pulling the energy market, the heart of the global economy, out from under the petrodollar system. The energy lever, a move to overturn shale oil, the pillar of US power over the past 50 years, has not only been military force, but the petrodollar, the arrangement that compels the world to use USD to buy oil. Now Russia and China are seeking to break that pillar by using OPEC Plus as leverage. OPEC Plus was once a structure that stabilized the market in ways beneficial to Washington, but the balance is shifting with Russia's participation and influence. OPEC Plus is no longer America's well-behaved partner. Something puzzling is happening. According to Reuters, OPEC Plus has tended to adjust output in an expansionary direction. Throughout the first half of 2025, the group repeatedly raised production despite an oversupplied market. There was even a major increase of nearly 500,000 barrels per day implemented in September. Why pump more oil when the market is already oversupplied and prices are low? This is uneconomic behavior. Yet it is a perfect geopolitical move. The goal isn't profit. The goal is America's shale oil industry. Shale oil is the ace card that gives the U.S. energy independence, but it has an Achilles heel: extremely high extraction costs. Shale needs oil prices to remain high to survive and compete. By accepting short-term price pressure, OPEC Plus, under Russia's influence and with Gulf state alignment, can launch a price war, push oil prices low for an extended period to choke the industry, driving many U.S. shale companies into bankruptcy. Since early 2025, multiple U.S. shale firms have begun cutting investment and shutting down rigs. If America's energy ace card is neutralized, Washington loses an enormous instrument of power. While Russia is busy with the energy chessboard, China has already prepared an alternative payment system. Beijing is no longer hiding its ambition to build an energy supply chain separated from the USD. It has signed a series of long-term contracts settled in renminbi with Russia, Iran, Saudi Arabia, and the UAE. And to ensure the renminbi is accepted, it actively hoards gold as collateral. The petrodollars will. The full picture is now visible. This is a pincer strategy, a coordinated, multi-front attack. Russia, through its influence in OPEC+, attacks output and oil prices, aiming directly at the throat of the U.S. shale industry. China, with its economic power, attacks the payment method, inserting the renminbi into long-term energy transactions. And gold is the binding agent, the supreme collateral for the entire new system. Russia and China are tightly linking monetary strategy with oil in an effort to restructure the world order. If a BRICS common currency, backed by gold and real commodities, emerges, and if oil transactions within OPEC Plus gradually shift towards settlement in local currencies rather than USD, that would be a thunderbolt against U.S. power. In that case, the petrodollar system, the foundation of Washington's dominance for nearly a century, would no longer be invulnerable. America would lose its greatest privilege, the near unlimited ability to print money to fund wars and import goods. The world may not change overnight, but those who are hoarding gold are not merely buying a precious metal, they are betting on the collapse of an old order and laying the groundwork for a transfer of financial power. A war without smoke, yet more brutal and profound than any war we have ever witnessed.